Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, that tend to you get some FOMO, and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do,
Mhm.
kind of based on the halving. My target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there.
After a week of growing anticipation that Bitcoin, the world's largest cryptocurrency by market cap, would surpass the $100,000 mark, it is currently trading below $94,000. This crucial resistance level has left the market divided on what to expect for Bitcoin in December and into 2025. Jeff Kendrick, head of digital assets research at Standard Chartered, suggests Bitcoin's price could drop to around $88,700 before rising sharply again. He believes the recent decline was triggered by the announcement of the new U.S. Treasury Secretary and a reduction in the U.S. Treasury term premium. Investment manager Lawrence Lepard agrees that Bitcoin could fall further, with his estimate placing it at $73,000. However, he believes this decline will be short-lived, and the bull run will continue into 2025. During a recent interview, Lepard predicted Bitcoin could reach $200,000 by 2025. He is optimistic about Bitcoin's long-term prospects, pointing to an impending reckoning in the stock market and banking industry that will drive investors to seek shelter in assets like Bitcoin. Lepard, a strong advocate for sound money, argues that when this economic reckoning occurs, Bitcoin's price will skyrocket as investors flock to it alongside a rise in gold prices. His outlook suggests that despite short-term price fluctuations, Bitcoin's future remains bright, with institutional interest and broader market dynamics driving its value higher.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I love to see everyone there. Peace out.
Guys are thinking correctly and cutting expenses. They're thinking correctly about that. But the point I would make there is that, we spent 6.75 trillion last fiscal year ended September. 80% of that is Social Security, Medicare, interest, and defense. So, when they talk about taking a hatchet to government and cutting government, unless you're going to touch those four areas, and they might touch defense a little bit because they might be able to end the Ukraine war, it's going to be hard to cut. So the remaining 20%, even if you take 30% off that, that's $270 billion a year. The deficit last year was 1.8 trillion. The run rate on the deficit this year is 2.4. So, the deficit's a real problem, and the debt growth is a real problem. So they're going to have their hands full.
It's a real problem for, I guess, the economy overall, but could it be a boon for certain assets?
It could be. It could be indeed, especially if they end up going to yield curve control and printing money to address it. And I think that's what's going to happen. It's obviously today isn't reflecting that because gold's down $80 and Bitcoin's soft and so forth. But, what I've been maintaining up until today, and I still do longer term, is that we're in a sovereign debt crisis. The fiscal situation is out of control. And you're really seeing this when you compare, the last 3-year performance of Bitcoin or gold to debt. And I just did some charts on this, which are on my Twitter feed for this New Orleans conference. In gold terms, compared to the bond, the gold's up 170%, in 3 years, and Bitcoin's up 3,000% in 3 years. And what this tells you is that the bond market is, in my opinion, in the process of failing. I mean, one thing that's interesting, as I know, is that they cut interest rates, the Fed cut interest rates, and yet, the 10-year has gone up 75 basis points. So that's not supposed to happen. And it tells you that the Fed is probably too loose. And yet, because they are, the ones setting the short-term rate, and Janet's using the short-term market to fund a lot of the debt that's rolling over, they're under a lot of pressure to keep cutting rates in an effort to, make the U.S. funding costs not go up, because interest expense is running at a $1.2 trillion rate. They certainly don't need that to get worse. They've got a lot of things they'll do, though. I mean, Besente's got an interesting trick up his sleeve. He's talked about maybe, Powell's term doesn't expire until early 2026. And Besente's talked about maybe appointing his successor, but, announcing who his successor was going to be beforehand and letting that guy give speeches. And so, in a sense, it'd be 1 year out forward guidance. It's an interesting concept. The Fed and the Treasury are going to quote unquote have their hands full, in my opinion, in the next 6 months. And it's particularly if something happens to the stock market. I mean, for those of us who are market historians and have looked at the market, valuation wise, I mean, it's hard to overemphasize how extremely overvalued this is. This is like in the top 1% of valuations ever. It's more overvalued than 29. It's more overvalued than 2000. I mean, there's a lot of good analytical work out there that just shows that the free money that we had, the ZERP and the low interest rates that we have blown an enormous stock market bubble. And if nothing goes wrong, valuations can stay stretched for a long period of time. But if something goes wrong, the stock market turns. A lot of people are in the stock market. Everyone bases their economic spending patterns on how the stock market is doing. And for some reason, for whatever reason, heaven forbid, the stock market turns, it's going to make, this entire situation, it's going to turn it into a mess.
Lepard is predicting a major reckoning for the U.S. stock market, which he believes is severely overvalued and on the brink of a massive bubble burst. He warns that the current situation is even worse than the dot-com bubble and expects the collapse to be just as devastating, wiping out tens of trillions of dollars almost overnight. When the crash begins, Lepard foresees the Federal Reserve being forced to intervene by printing more money than ever before in history. He calls this scenario the big print and warns that it could mark the end of the traditional financial system as we know it. Despite the catastrophic impact on stocks, bonds, and other traditional assets, Lepard is confident that Bitcoin, gold, and other safe haven assets will thrive. He argues that the days of the fiat monetary system are numbered, and Bitcoin will become a cornerstone of the new monetary system. According to Lepard, this shift will reshape the financial landscape, positioning Bitcoin as a secure foundation for the future. Lepard's analysis reflects his belief in the inevitable collapse of the current financial structure, with Bitcoin emerging as a key player in the next phase of global economic. His views highlight the potential for digital assets to thrive amidst economic turmoil, providing investors with an alternative to traditional financial systems.
The more important thing to me that I found so interesting was just how strong and persistent the breakout was. And for those who've been following it, Bitcoin had kind of been trading sideways for quite some time. And there was a joke on Twitter about the 58K club, and 58K was the bottom, and kind of high 60s, 70, low 70s was the top. And I always sensed that when it did break through the 73, 72, 73 area, it was going to squirt higher. And boy, it sure did. It went it kind of straight lined from 70 something to 99, as you know. Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, that you get some FOMO, and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do, kind of based on the halving. And my target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there. But obviously today it's getting hammered, and it wouldn't, it's not unusual either for things to break out to go back and test the breakout point. So I think I'd be very surprised if it went below 73. I'd actually be surprised if it went back to 73, but could it retrace a bit of the recent gains? Sure, it could. A lot of it depends on how many of the buyers in the last, month or so have been doing so on leverage and have been doing so with speculation. When they suddenly realize that 110 isn't imminent and they get scared, they're going to bail. And so we'll have to go back to 90 to build a new base at 90 or something. I don't know. That's just a thought. I mean, it's very hard to tell. And I never trade it. I never sell it. I just have my Bitcoin, and that's that. I view it as a long-term, store of value, very much the way I view the gold that I own as a long-term store of value.
When you say 200,000 as a cycle top, when did this cycle start for you?
It kind of started when it was kind of trading around 50. I mean, the bottom was 15, as you know, after FTX, but it kind of
Yes.
based for a number of years around 50-ish. 50, 58. I don't have a chart right in front of me, but and the history of these cycles is they tend to go to, 4, 5, 6 times, the base. So that would imply that we could get to, 160, 200, maybe even high as 250 or 300. I don't know. Then it would be quite extended above its 200-day moving average, and it would be quite extended above the power law model, which I think has validity because backtesting the power law model has described 97% of the movements. So, it's the thing I think people have to keep in mind is that it's a volatile asset with a strong bias upward. And I've always recommended people have a little bit of it, or the only wrong allocation is zero, and you should dollar cost average on your Bitcoin purchases. I mean, I was buying it at 15, buying it at 30, was buying it at 50, was buying it at 70. When I get some more money, I'll buy it at 90. I think it'll be much higher in 5 or 10 years, but between here and there, it could go up and down a lot.
Okay, so basically it'll 4x from its bottom in the next cycle. What's your thesis there?
Because that's if you go back and you look at prior cycles, that's kind of what's happened. In earlier cycles, it was actually more than 4x. And it's not just the X, it's kind of the standard deviations off of the base. This is the power law model. But there were some of the earlier cycles you actually got like 9x off the bottom or off the base. But it's, with each, as it grows up, as more people
Yeah.
hold it, as it gets more widely distributed, you see that the ups aren't as bad and the downs aren't as high and the downs aren't as low. The first drawdown I think was 90 some odd percent. More recent drawdown, last drawdown I think was 70-ish. And I expect these drawdowns to move to the 60s and 50s and 40s. I mean, over time, as it gets more widely distributed.
Currently, the United States faces approximately $200 trillion in funded and unfunded liabilities, supported by only $5 trillion in assets, along with shrinking tax revenues and rapidly growing debt expenses. This situation is why experts like Lepard, who understand both the fiat and Bitcoin sides of the financial system, have repeatedly warned about the risks of relying entirely on the fiat Ponzi scheme. While Bitcoin has a fixed supply, isn't controlled by any single entity, and is secured by the most powerful computer network in existence, the US dollar, representing the fiat system, has an unlimited supply, is centrally controlled, and is backed by nothing. Bitcoin has outperformed many assets, particularly when compared to the balance sheets of central banks, including the Federal Reserve. As these banks inflate and devalue their fiat currencies, Bitcoin tends to rise in value. Lepard predicts that when the next round of money printing begins, the Federal Reserve's balance sheet will more than double, surpassing $20 trillion, which will likely lead to a rapid increase in the value of Bitcoin and other cryptocurrencies. Lepard's outlook on Bitcoin, gold, and the U.S. economy highlights his belief that the current financial system is unsustainable. As fiat currencies continue to weaken due to inflation and debt, he sees Bitcoin as a key hedge and a strong performer in the coming economic turmoil. What are your thoughts on Lepard's predictions for Bitcoin, gold, and the future of the U.S. economy? Share your views in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.